So what if you could protect your portfolio and make steady profits and protect yourself if the market were to pull back? Well, that's exactly what I'm going to show you in this video. We're going to discuss covered calls, how to properly use them on stocks. I'll be covering important topics such as delta, strike selection, managing the strategy, opening and closing the strategy from beginning to end, and we'll also briefly cover rolling the option. So my portfolio is currently sitting at $4.1 million. Things are going very well, and I have several covered call positions in my portfolio. So I'll be going over some interactive examples. We'll go over some Palantir right now. Specifically, Palantir has had an absolute rocket of a momentum swing. And as the stock gets more and more expensive here, I think it's increasingly important to be selling covered calls. Covered calls generate income. Covered calls actually give you some cushion on the downside, because if the stock pulls back, the premium that you collect on the call option that you sell is going to give you some cushion. So covered calls are specifically good because as stocks reach record highs, we're sitting at all-time highs. That's higher risk. That is higher risk for your portfolio because drawdowns will happen. And you can watch my yesterday's video on some of the reasons why I think that right now we may get a pullback in the near future, and I'm being more cautious on the market. And that's just very smart, I think, from my side, but it's just an opinion. Obviously, I don't know what's going to happen in the market, but I do believe covered calls are strong. Specifically, you can go for 40 to 45 delta covered calls. Now, I'll show you an example of what that looks like on Palantir. So it's pretty wild. Palantir is up 30% in the past month, and year to date, the stock is up 147%. And this momentum is very strong, but at some point, it's going to have to cool off. And right now, we don't have a clear catalyst. So selling covered calls, not during earnings, and when there's not a clear catalyst, can be a very good way to generate income. So look, I'm going to go to sell call, and for each covered call, it's as usual, you need 100 shares. Each call option, you need 100 shares, and you sell a call option to generate income. Now, for the expiration date, I'm just going to go out 30 days, something like that, or let's actually go to the traditional expiration. September 19th would be the traditional expiration for September. So look, if I look for an option here, you can see here 42 delta. Well, this is a very high delta. Okay, this high delta actually means that there's like a 42% chance of this option expiring in the money. Meaning there's a 42% chance, or 0.42 delta, that Palantir will be 195 at expiration of September 19th. So this is a higher delta trade, but it has very amazing statistics. The bid and ask is pretty good, right? We have $7.85 on the bid and $8 on the ask. The implied volatility is 46, which is high implied volatility. That's a good thing. You want to sell options into high volatility. When VIX is higher, or just a single stock has higher volatility, that's a good time to sell options in general, whether it's selling puts, which I have plenty of videos on, or covered calls. In both cases, it's good because when there's elevated volatility, the premium is also likewise elevated. The volume is very good at 845 contracts traded last trading day, and open interest in total is 4,500 contracts. So this is a very good option to sell. And right now, if I go to this right here, I'm essentially collecting about $800 in premium. So I'm going to collect $800 for every 100 shares that I have, which right now it's almost $20,000. So you're making about $800 on almost $20,000 of Palantir. So that's basically about a 4% return in about a month. Okay, so maybe it's a little bit more since I rounded up to 20,000, right? So you can collect 4% per month, and you still have upside up until 195. So if Palantir goes to 198, you have to sell at 195. If Palantir goes to 193, well, you don't have to sell it. You only have to sell it if it's above 195 or at 195 at expiration on September 19th. So you can see here how this kind of payoff chart looks like. It's not fully correct because Robinhood is just showing me a short call option, as you can see here. It's not showing me owning the shares. But essentially what it's going to look like is you have growth on the upside, and at 195, you're done. So now you're going sideways. So you have upward, and then you're done, right? However, because you collected $800, you have $800 more than what a stockholder has. So if Palantir stays the same, well, the stockholder would make nothing and you would make $800, right? If Palantir goes up by $1, well, that's cool. You still make $1 and you still get to keep the 800. If it goes up $2, you make 200 plus 800, right? So it's very advantageous if Palantir stays within a certain range, right? If it goes up to 195, that's all beautiful because you make money and you still collect premium. If it goes down, I see it as really a win-win situation. Of course, the stock going down is not good, and that's why I'm giving you this video, is I believe the stock market may pull down. But if it does pull down, the covered call, it gives you $800 worth of cushion that you wouldn't have otherwise, right? So of course, if the stock market goes down, it's better just to be in cash. But we're not going to try to predict the future here. We're not going to try to be market timers. We're just trying to generate income, hedge ourselves, and be proactive in protecting our wealth. And with Palantir, if the stock goes down 10 bucks, the stockholder would lose 10 bucks. But if you've collected $8 in covered call premium, well, that's good, right? You have an $8 buffer, right? So if it goes down 10 bucks, you lose 2. Everyone lost 10, you lost 2. So it's very advantageous to sell covered calls, and I'm recommending that you look into selling covered calls on stocks that have been elevated right now. Nvidia, Palantir, Tesla in general has high implied volatility, so it's almost always a good time to sell covered calls on Tesla. Also, if you don't mind selling shares at that price, there's nothing wrong with letting go of your shares, because if it's above your cost basis, which for everyone it is, we're in an awesome bull market right now. So essentially, if it's above your cost basis, or even if it's slightly above your cost basis, you may want to just take profit, especially if it's hitting some of its resistance levels, right? So if I go to something like, we'll go to Yahoo Finance and I'll show you like Palantir, where it's at the technical chart, it is concerning. It's concerning to see a company that is up so much, even though they have a great business, even though they have a lot of innovation, and even though they are part of an amazing trend. I'm not sure why Palantir didn't come up here, but let's do that one more time. Even though it's an amazing company, it doesn't mean that an amazing company can just continue to go to the moon. It still has to follow some valuation metrics, right? I don't want to just buy stocks even if they have a good business for the wrong price. So that's really important. Now look, you can see here that essentially we're continuing to go up, and I'm going to set a indicator here. My indicator is going to be, so I have RSI of volume. My indicator here will be Bollinger Band. I want to show you what the Bollinger Band looks like, and let me scroll down here. So the Bollinger Band here has expanded to account for Palantir's big momentum and higher implied volatility. But still, Palantir is really above the Bollinger Band for a significant amount of time. And although the trend is clear, I do think that at some point we're going to have to stall out. Stocks don't just, rise to the moon. They do have some gravity to them. Even if they have a strong business, they're going to get pullbacks. And right now, I think it's a good time to be a bit more cautious. Maybe it's over the next 1 or 2 or 3 weeks. And maybe it's for the next 4 to 6 weeks. In that time frame, right? Long term, I'm a bull, but covered calls are still a bullish strategy. So I'm not fully going bear mode or telling you to sell shares or anything like that. I'm just simply saying go for higher delta covered calls to generate income. Generating income is always good. Plus, it gives you some margin of safety in case we get a pullback. Plus, still go out of the money, giving yourself some upside room when you're selling covered calls. So right now, I would sell something like 195, like I said, because the 190 we're already above Bollinger Band, or right at the top. So 195 in the next 30 days gives you pretty good upside. Plus, gives you a buffer, right? Now, if the underlying stock, it doesn't have to be Palantir. I'm just using it as an example. It could be literally anything, Riot or Mara or SMCI or whatever you're personally trading, right? If it's different from what I'm trading, doesn't matter. I'm just here to make you some money and give you some good tips on becoming a better trader. If the underlying is stretched on the RSI, if it's approaching its resistance on the Bollinger Band, or if we just see a seasonal pullback coming in, then covered calls are going to way outperform, and picking a 40 to 45 delta strike can be really close enough to capping your upside, but it wouldn't really matter, because if the stock pulls back anyways, you're just making free money. You're literally just getting paid free money. So if you expect a choppy or slightly bearish price action, then the higher delta strike gives you a larger immediate cash buffer or higher premium against small drawdowns. If we have a big drawdown, it's a big drawdown, you would have lost money anyways. But on a small drawdown, in both cases, you are making money. You're making money in all cases. The only area where you kind of don't make money, or you might be a little bit upset, is if Palantir goes to $250 per share. I don't think that's going to happen in 30 days. It's just highly, highly unlikely. Very, very unlikely, like less than 2% chance. So in that case, if it went to 250, then yes, you would be in the money and you would let go of a lot of the upside that you could have made. You still wouldn't lose money, you just wouldn't make as much money as you could have. So this is pretty much my mindset right now on what I'm doing with my portfolio. I'm even doing something unique, such as selling in the money options. I did that on Nvidia, so I can show you that position right now. It didn't work out super well. I mean, it didn't work out bad either. I'll show you my position on Nvidia. I did a in the money covered call at 170. So right now I have a lot of Nvidia. I've been going pretty bullish on Nvidia, and I made a big trade in my Discord where I switched Apple for Nvidia. And Nvidia just went up a lot. But here's kind of what can happen if you do sell a covered call. So here's like the downside, right? The other side of the coin, or the FOMO, where you miss out. It's not a huge issue, but Nvidia's at 183. I bought a whole lot of shares, 5,000 of them, and I have a 170 covered call. So you can see here, I'm down 11,000. I'm up $47,000, but I'm down 11 on the covered call. So it is what it is. There's a few ways to manage this. Basically, as I get closer to September 19th expiration, I will roll up this option and I'll take it from something like 170, like I have right now, and I'll move it up to 175. And the reason for that is I don't want to let go of Nvidia. I like the stock, but I'm trying to make slow, passive, steady income. I don't really care about getting rich overnight. I don't care about getting that much richer super fast at the expense of higher risk. For me, it's all about like step by step by step, getting to retirement, which I've already done. Like I'm already retired. I've been for like a few years now, right? But I'm trying to get you to that point where you don't really need to like work. Your portfolio just takes care of you, and you have that steady growth. And yeah, maybe you're not living the craziest lifestyle, right? Maybe you have $500,000 and your portfolio every single month is like 520K, 540K, 560K, 585K, 615K, something like that, right? Where you have that nice progression of monthly income. I think it's really nice. And if I could go back in time, I mean, I took on higher risks. I scaled my portfolio, and I think that's what a lot of people come to me for coaching, is they want to scale faster. And that's perfectly fine as well. But I just want to give you this covered call strategy because there's like two ways to get like wealthy, right? The slow and the fast way, right? Of course, we all want fast, but you have to realize that there's a lot of people that do try option trading and they quit and they lose. And it's not because option trading doesn't work, it's because they came in a little bit too aggressive. They came in wanting to make money a little too fast. I mean, this market is really conducive for that, but I'm just talking about longevity here. I'm talking about you being an investor for the rest of your life. I'm talking about, when I coach students, I say, you're going to be doing this for the next 10, 20, 30 years. So let's not rush here. Let's properly allocate capital. Let's properly get into the positions. Let's use covered calls. If we, like, for example, this Nvidia situation, I'm down 11K, but I'm up 47. I mean, can I really complain here? No, I cannot. Like, I've made the difference, which is like 48K minus, let's say 12. I made $36,000 in a very short amount of time on, of course, decent amount of capital, but I still got a really nice rate of return. My return is like, on this position, like 3% in 3 weeks, right? So if you annualize that return, it's a very large annual return. So I really like that approach of, starting here and just kind of going up and up and up. And then when you get a downward action in the market, you don't really dip as much as the market. So you have a much more consistent and reliable income stream. And I think very few people are really doing that. Like, as far as I know, on YouTube and in coaching in general, people are all kind of focused on the really sexy stuff, right? Or even if they say, oh, you can make consistent income, they're just saying that in terms of like, selling courses and programs. I don't think anyone actually understands the deep risk management concepts that I'm covering on how much you should have in each position, what delta you should pick, how you should pick your expiration dates, keeping it really simple for the longevity of your portfolio. Anyways, I'll cut it there. I want to keep this video not too long. I hope that you enjoyed this, and yeah, if you want help, coaching, or anything like that, it's the first link in the description. Happy to help, and I'll see you in the next one.